Hello everyone, this is Alejandro Cremades, and today we're going to be talking about how to share information with investors. So sharing information with investors is a real headache for entrepreneurs. You really don't know who is going to be seeing those materials, if they're going to be forwarded to someone else. And it's a real headache to founders because you really want to keep them tied to your vest, but essentially you're going to have to open the kimono somehow so that people gain access and understand and validate some of that information that you're actually sharing during meetings. So in today's video, we're going to be sharing exactly what you're going to be sharing, how you're going to be sharing it, and then also how you can protect yourself. So with that being said, let's get into it. So one of the last steps in the fundraising process is basically going to be the due diligence stage, essentially. And at this stage, the investor wants to essentially validate the claims that the entrepreneur has made during the conversations. So essentially, when you are thinking about the due diligence, you should expect to be asked or request for the following materials: business model and any business plans you have developed, personal business track record, financial details such as profit and burn rate, team reputation, detailed information about owned assets, contractual obligations, current and future risk and liabilities your business faces, insurance agreements, revenue streams and your supply chain information, the depth and structure of your business, trademarks and patents, both existing and pending, your market research data, details about exactly how your product and services work. So essentially, before you actually get to that due diligence process, they may actually request some of those pieces of information individually. I find that personally, I would not recommend having a non-disclosure agreement in place before you enter the actual formal due diligence phase, because essentially you are adding more friction to the fundraising process. And fundraising is not about adding friction, but it's about removing friction. So unless it is clear they've given you a term sheet, they're ready to move forward to the due diligence phase before the offering documents are signed, it means that you should not yet put a non-disclosure agreement in place so that you can continue to move the fundraising process in a very smooth way. So in terms of sharing the information securely, you essentially want, especially when you get to that due diligence process, you want to make sure that you have a non-disclosure agreement or a confidentiality agreement in place so that you can protect whatever information that you're going to be sharing with that investor. Now, there's different ways and different tools that you can use that information, such as Google Drive, such as Dropbox, or maybe any other cloud-based application where essentially you are sending that link to the investor and you remain in control. I find that the worst that you can do is to add whatever documents in attachments to emails, because the minute that you do that, that is the minute that you lose control over whatever materials that you're sharing. By having all those materials in one single, let's say, space on the cloud, you're going to be able to remove access from that investor whenever you don't want them to access those materials any longer. So for that reason, a cloud-based application is the best way to go so that you remain in control of whatever information you're going to be sharing. So when you are actually going through the fundraising process, there's going to be different stages that you're going to be encountering in terms of interactions with the investor. Every single interaction is going to require different pieces of information that you're sharing all along the way. So with that being said, we're going to now break it down from the different stages and exactly what you're actually sharing during those stages. So during the first contact with the investor, essentially what you want to do is you just want to pick the interest of the investor. You do not want to overwhelm them with information. At this point, maybe you can go into the why of why you essentially got started with this business before you go into the what and the how. And also, if you haven't, let's say, maybe like at that first meeting is just that first contact via the introduction of someone, and that investor is asking for materials in advance of that discussion, you want to be very careful because you're not sure what is driving the agenda. You don't know if they've invested in a competitor or if maybe they're not, just doing market intelligence type of surveying, to really capture that data. So you got to be very careful. And maybe what you could do is just, if you're sending a pitch deck, remove the financials from that pitch deck so that essentially you're not adding sensitive information. So again, the first contact is all about creating that attractiveness around your story, around your venture, so that they invite you to do a follow-on meeting or perhaps that proper, serious, and professional meeting so that you can explore whether or not there is a possibility of exploring something together with that investor. So during a pitch, exactly what you're going to be sharing is how it works. You're going to be really talking about the product or the service, giving them really a glimpse so that they get it. And exactly here, you're not going to be sharing much more than that. You may even do it like on the narrative, maybe like on the phone, maybe like in person without the need of slides, or perhaps with some slides. But that's essentially it. So on the pitch follow-up, you really need to take it to the next level. Here, after your first interaction, you're going to be following up with a thank you note. And in that thank you note, you're going to be adding there the pitch deck and then also the financial model so that they can review further and perhaps share it internally with some of their partners or with some of their friends in the event that they are angels or maybe like venture capital firms. So here, exactly, they're going to be reviewing the information in detail, really putting that in contrast with whatever you shared during your previous meeting, and that is going to determine whether or not they're going to move forward with a follow-up meeting. So when you get a preliminary offer, so this is really when you're going to be pulling down the curtain. I mean, this could be either a verbal, maybe commitment to make an investment. Maybe they're giving you a potential term sheet and they've promised to really do that. And here, if they're asking for whatever, you just got to share it. You can use an NDA, a confidentiality agreement, or maybe wait until you actually have the term sheet that you've signed. But essentially here, you need to be prepared to go a little bit above and beyond to really share information that could really push that investor over the edge. So when there is a concrete offer, here is where you're really going all in, as I was mentioning earlier. At this point, you really have it on the table. You've signed that term sheet. There's clear alignment to really move forward and getting a deal done. So here you get the NDA or the confidentiality agreement, and you really move forward towards that due diligence process and sharing all that information that you're going to have at this point in a data room, in let's say a Google Drive or a Dropbox, so that you get those people to actually verify whatever claims you've made and to really move forward with an investment. So with that being said, I love to hear in the comment section what you're up to and what has been that due diligence process, or perhaps the process of sharing information with investors for you. Also, like this video if you enjoyed this time, and then also subscribe to the channel so that you don't miss out on all the videos that we're rolling out every week. And take a look as well at the fundraising training, which is the program where we help entrepreneurs from A to Z with everything related to fundraising. There you'll find live Q&As, templates, agreements, a community of founders helping each other all over the world. And I find that you'll really see tremendous value in it. So thank you so much for watching.